Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay joining me from Delhi. It was one of those days that the markets were not quite prepared to see the red on the screen after records tumbled by the wayside just all of last week and crude saw a huge $10 fall over the weekend. The markets were perhaps not prepared for this kind of a red on the screen. That's largely because of some negative growth cues coming in from China and a little bit from the US as well. The festive sales not doing too well. Perhaps some butterflies in the stomach ahead of the credit policy. Hi, Surabhi.
Absolutely, Lata, you said it exactly. I guess we're running into such a big event tomorrow, so people wanted to start off on a bit of a somber note. Perhaps today, there's a lot to talk about over the next half an hour. Let's start first with the headlines. Markets start the week with declines. Benchmark indices lose about 0.5% each, dragged down by metal, oil and gas and power stocks. FMCG and technology names, however, hold out in green territory.
Mixed trends in November auto sales. TVS sees a 36% growth and Maruti sees a 20% sales growth. But M&M disappoints with 13% sales drop, while Eicher and Ashok Leyland see steady sales growth.
In midcap action, jewellery shares surge anywhere between 5 and 20% after the RBI scraps the 80-20 gold import rule. Meanwhile, jet and SpiceJet fly high once again as crude continues to tumble and domestic ATF prices see another 4% cut.
Bullish calls continue to come in on India. Morgan Stanley sees the Sensex hitting 32,500 by December 2015. Citi also raises its December 2015 Sensex target to 33,000. Says rate cuts will be front-loaded next year. Well, those were the headlines, and here are the experts that we have lined up on the show for you today. Market perspective from Gautam Shah of JM Financial, Mark Matthew of Bank Julius Baer. Matthew will also give us his take on the Indian markets in a global context. Sudarshan Sukhani will talk to us about the technicals of the market. We'll also get you a whole host of experts to tell us about their expectations from the credit policy tomorrow.
All right, before we get to all that analysis and all those views, let's talk about the day's trading action. It was a lackluster start to the week on the Lal Street. Weak global cues coupled with profit booking dragging the major indices lower in trade. Anuj is here with the details of what really transpired today. Anuj?
Well, a weak day for market, but more importantly, weak closing. The market closed at low point of the day. A couple of factors went against the market today. One was that you have the policy tomorrow, so not too many people want to go with too many long positions. And the market in any case has been net long heading into the event. And the second was the news flow regarding Russia and what was happening on that currency clearly had an impact on the sentiment because European markets were down quite a bit in second half when we were trading. In terms of individual stocks, oil and gas saw quite a bit of profit booking today, but more importantly, big stocks like Reliance, ONGC, they were down quite a bit. ONGC really has been one big problem area for the market. HDFC also was down in trade. And as you would expect on a day like this today, high beta was seeing a bit of sell-off. So Jindal Steel, NMDC, Hindalco, the metal names, and outside the index, the real estate names like Unitech, HDIL, all these stocks were down quite a bit. And as you would expect on a day like today, there was quite a bit of shift to defensive. So you had Asian Paints that was up 5%. Hindustan Unilever made a new lifetime high. TCS was up in trade today. So the flavor clearly was defensives today. Tomorrow is the policy, and that really is the next big cue to watch out for now.
All right. Thanks a lot for that, Anuj. There were clearly some negative growth cues as well, especially after the Chinese PMI disappointed and the US holiday sales didn't do well. So stocks like all the metal stocks, Hindalco, Tata Steel, Sesa Sterlite types, or for that matter, power stocks, energy stocks, most commodities exposed to the commodity, most stocks exposed to the commodity cycle had a bit of a nick, as you can see. As well, the famed PSU banking lot, which rose by 5% last week, today saw a little bit of profit taking. And as you can see, some of the bigger PSU banks in particular, but not only PSU banks, saw some decent amount of profit taking. Just in case that rate cut doesn't come, must point out Titan as well for you. Some of the gold stocks, of course, brought a lot of glitter to the market. Well, that was the details of the market. time now for some market perspective. Gautam Shah, Associate Director and Technical Analyst of JM Financial, expects to see further corrections in the market over the next 4 to 8 weeks. But he says that the Nifty still has potential to reach 8,600 to 8,700 levels.
I think at this point of time, at levels of 86, 8700, just about too many technical studies have come to a point to suggest that this could potentially be a top. I think this zone of 8600 to 8700 is a wall of resistance, and I don't think it's going to be very easy for the market to clear this. When the momentum is very strong, you really do not fight the momentum. So what we've been recommending is to take profits. I think in this 86, 8700 zone, I think is a great area to be taking serious profits, because I think the next couple of months is going to be all about protecting returns. I think the next 4 to 8 weeks might be a little on the corrective side. Having said that, you should not be fighting a trend in a bull market. So I think what we are recommending here is booking profits. But at any point of time, if the Nifty were to break 84.30, which I think is an important level for the next couple of weeks, that would be the first indication of entering shorts, because then you could have the Nifty go down to a level of 8200, potentially even 79, 75 and lower. I'm strongly of the opinion that the Bank Nifty charts are also not supportive with what the price action is doing right now. And therefore, in this 18,500, 19,000 band, I think is a good area to be booking profits. Yes, I think the momentum has been strong, and this has really been the Pied Piper of the market. But when we look at the weekly and the monthly charts, I think Bank Nifty has really done most of its targets based on indicator, Elliott or pattern studies, and therefore this is really an excess, and typically excesses last for a few percentage points, and that's the reason I believe that closer to that 19,000 mark on the Bank Nifty, I think would be a good opportunity to profits.
All right, let's move on now to all the cues that are coming in from the futures and options space. We have Nigel joining in on the same. Nigel, quite start to the week.
Well, after quite a while in the derivatives market, we saw call writers making money and put buyers as well made money in today's session itself. So the 8,700 call as well as the 8,800 call, both those strikes were fairly active, and the premium on both those two strikes, they crashed a good bit. So all those buyers of those calls, they seem to have overstayed their welcome, and in today's session itself, sharp cuts were seen on those premiums. The put buyers, though, they made money because the Nifty ended lower by nearly around 30 points odd. So the 8,300 put, we saw the premium move from around $21 to around $24. The lower level put buying, in fact, made you some money in trade today, while the 8,500 put saw the premium move from around $56 all the way to around that 66 rupee odd mark. Now, from the individual stocks, we saw big buying on something like an Asian Paint second day running. Big buying was seen on that particular counter, while Strides Arco Labs, in percentage terms, the open interest swelled up more than 50%, and Titan as well did see big buying in today's session itself. On the flip side, though, we saw SBI, the stock that has seen a big run, did come in for some unwinding pressure in today's session, while high beta wasn't the place to be. So India Bulls real estate was getting sold into, HDI as well was getting sold into, and finally something like a Unitech as well did see a sharp cut. Big shorting was seen on that counter as well.
Thanks a lot for that, Nigel. Well put. High beta was not the place to be in today in the markets. But a big trigger for the market today, as it has been for the last several weeks, was crude prices. There's simply no stopping the rout. In fact, this is the worst losing streak for crude since the 2008 global financial crisis. So, how low can the prices go? How long will the rout last? Jonathan Barrett of Ayers Alliance Securities expects the WTI will fall to $40 if the current price war spirals out of control. So, is $40 the base? No, not really. Billionaire and chairman of Canadian Natural Resource Murray Edwards expects the WPI to lose 50% from here on and hit the $30 per barrel mark. So, there is no dearth of conspiracy theories. So, let's hear out some global opinion on the tumbling crude prices.
This is exactly like 1985-86, where it took 24 years before you moved back to the same sort of price level once it started that decline. I think Saudi Arabia, my view, is that they are actually hoping that this is going to be a short, quick, really hard, very painful sort of short event, and then it's going to come back in a year or two after you essentially kind of wash out some of the weaker players.
This is something we've been expecting for quite a while, so it's not as obvious as, the direct impact of lower oil prices depends on taxation and depends on how fast it can be put through to different consumers. So in the US, the reaction is very, very fast. If you look at other countries, like in Europe, for example, where taxation is much higher, it's different. But it is very clear, and to me, the major question at this point is, at what level of oil price will we see cut in production? I think that's really the key.
All this talk is perhaps music to the Modi government's ears for very obvious reasons. The Indian crude basket fell to just above $70 per barrel on Friday. Remember, just yesterday, of course, we had more good news coming in for consumers that petrol and diesel prices have been cut by over 1 rupee per litre. Speaking to CNBC TV 18 earlier today, the chairman of Indian Oil Corporation refused to predict the base for crude prices, but he did add that this is good news for his company, for the Indian economy, and of course for the Indian consumer.
It will be very difficult to predict the crude prices, but what I can say is the fall in crude prices is good for India, and it's been good for the Indian consumer. Because you have seen prices drop of both petrol as well as diesel in the last couple of months, and it augurs well. From an Indian Oil's perspective, this news is also good for us because it definitely helps in reducing our borrowings and cut down on our interest costs. So we do believe that if this trend continues, it will be good.
All right, from oil to Motown. November has turned out to be actually a strong month for auto companies. Maruti, TVS Motor and Ashok Leyland have showcased a recovery in their November sales, though M&M continues to struggle. Sonia Shanoy here is with all the details. Sonia.
Well, thanks for that. There has been good cheer for the auto sector in the month of November. Across categories, we've seen a good pickup in sales. Let me start off with Maruti, which hit a record high today after the sales grew 19.5% year-on-year. Big support coming in from exports, which led to the overall growth. TVS Motor from the two-wheeler space also saw very strong sales. That's on account of the big surge in scooter sales because of the new scooter Jupiter. So total sales were up 36% year-on-year, and scooter sales went up by 62%. Even in the commercial vehicle segment, Ashok Leyland reported a good growth in sales, one on account of a low base and two on account of the pickup in the medium and heavy commercial vehicle sector. So total sales went up 44%, and MHCV sales were up 92% year-on-year. And then you had Eicher Motors. That one has been a consistent performer, especially with its Royal Enfield motorbike. So this time around, the total sales for Royal Enfield went up by 52% year-on-year. The only weak spot was M&M this time. It was a double whammy for the company as both the auto and the tractor sales disappointed. So auto sales were down 13% and tractor sales were down 34%. Auto sales weak on account of the consistent loss in market share. They've been losing market share to players like Renault, etc. And in the tractor sales, because of the weak monsoons, we've seen a big slump in sales. But overall, for the sector as a whole, it's been a good month.
Right, Sonia, thank you so much for that. Of course, that was quite evident on the M&M stock, which was the one that ended negative, down nearly 3% in trade. But let's now move on to the big corporate story of the day. The proposed $4 billion merger between Sun Pharmaceuticals and Ranbaxy seems to have hit a bit of a hurdle. The competition watchdog has sent the proposal back to the companies seeking some changes. Archana Shukla is now joining in. Archana, tell us what sort of competition or market dominance is the competition watchdog fearing here?
Well, if we look at how they've been looking at this deal, first of all, it's not an unexpected move by the CCI. It is two large drug companies merging, and definitely there are drug categories where they will have a market dominance, and which is where the CCI is having a close eye on. The document that the two companies together had put out listed about 37 drug categories as primarily in the cardiovascular and anti-diabetic space where they will have a market dominance post the merger, and we understand it are these drug categories that the CCI is looking at. And after a very, very close look at that list and also seeking comments from the public on how they should be going ahead with this, they've sent back the deal asking them to divest some of the brands from these 37 drug categories. We are yet to get a sense on which exact drug categories or brands are these that have been asked to be divested, but the CCI has asked the companies to respond in a day or two do with whether they accept this or not. Until then, the approval would be held back from the CCI. And if both the companies come back with accepting these divestments and reducing market share in some of the drug categories, we understand the approval from CCI could come as early as the end of this week. But it is held up till they hear from these two companies. 37 drug categories is what the list suggests that they are looking at. But look at it from this way. There is a difference when we look at a merger in a pharmaceutical space versus some other sector, because these are medicines that we are talking about.
Yes.
And there are two things. One is market dominance and monopolistic situation. So CCI is definitely looking at it very, very closely.
Fair enough. Thanks a lot for that, Archana. We have to take a break on that note. But coming up, Sudarshan Sukhani will join in to give us some technicals and also some stocks that he's watching. We'll have other experts also giving you trading strategies.